Ladies and gentlemen, good day and welcome to Sharda Cropchem Ltd. Q2 and H1 FY26 earnings conference call hosted by Antique Stock Broking Ltd. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Riju Daloi from Antique Stock Broking Ltd. Thank you and over to you, sir.
Thank you. On behalf of Antique Stock Broking, a warm welcome to all the participants on the 2Q FY26 earnings conference call of Sharda Cropchem. Today we have Mr. R.V. Bubna, Chairman and Managing Director, Mr. Sailesh, CFO, Mr. Jaskin Gudka, Company Secretary from the management side. Without any delay, I would like to hand over the call to Mr. Bubna for his opening remarks, post which we will open the floor for Q&A. Thank you and over to you, sir.
Thank you, my friend. Good afternoon and very warm welcome to everyone present on the call. Along with me, I have Mr. Sailesh Mahendale, our CFO, Mr. Jaskin Gudka, Company Secretary, and SGA, our Investor Relations Advisors. Hope you all have received our investor deck by now. As you are aware, we are engaged in marketing and distribution of wide range of agrochemical products, that is herbicides, insecticides, fungicides and biocides, catering to diverse global customer base. We prepare comprehensive dossiers and seek registrations in our own name. We allocate substantial resources for securing registrations of our products and thus establish our foothold in the market. Our total product registrations stood at 2,994 as on 30th September 2025. Additionally, 1068 applications of the product registrations globally are at the approval stage. Coming to industry dynamics, the global agrochemical market is showing signs of recovery driven in demand, complemented by gradual recovery in the pricing. Inventories have come down to normal level across distribution channels. In Q2 FY26, our total revenues have grown by 20% to rupees 929 crores with overall volume growth of 35%. This performance is attributable to global revival in the demand and recovery in the prices. We have seen volume growth across all the regions. Volumes from agrochemical segment grew by 36% and non-agrochemical sectors grew by 11% on year-to-year basis. With input costs stabilizing, our gross margins have expanded by 690 basis points to 34.5%. We expect gross margins to be in the similar range in FY26. EBITDA for the quarter stood at 139 crores, a growth of 71% on year-to-year basis, with EBITDA margins of 15%. For FY26, we are on track to maintain healthy EBITDA margins in the range of 15 to 18%. PAT for the quarter stood at rupees 74 crores, showing a growth of 75% on Y-to-Y basis. Working capital days stood at 84 days as on 30th September 2025, showing an improvement of 34 days as compared to March 2025. Capex from H1 FY26 stood at rupees 250 crores. Cash, bank and liquid investments stood at rupees 794 crores as on 30th September 2025. As we step into FY26, we aim to increase the product registrations with a planned capex of rupees 450 to 500 crores, backed by strong pipeline that reflects our resilience and growth focus. With this brief overview, I would now like to hand over the call to our CFO, Mr. Sailesh Mahendale, for discussing our financial performance. Thank you very much.
Thank you, sir. Good afternoon, everyone. Coming to Quarter 2 Financial Year 26 performance, revenue stood at rupees 929 crores in Quarter 2 FY26 versus rupees 777 crores in Q2 FY25 with an increase of 20% year-on-year. Coming to the split, agrochemical business grew by 27% year-on-year to rupees 803 crores, whereas the non-agrochemical business degrew by 11% year-on-year to rupees 126 crore. Gross margin stood at 34.5% in Q2 FY26 as against 27.6% in Q2 FY25 with an increase of 690 basis points. EBITDA grew by 71%, which stood at rupees 139 crores with EBITDA margin at 15%. PAT stood at rupees 74 crores versus rupees 42 crores last year, showing 75% growth on year-on-year basis. Coming to H1 FY26 performance, revenue stood at 1,914 crores in H1 FY26 versus rupees 1,562 crores in H1 FY25 with an increase of 23% year-on-year. Coming to the split, agrochemical business grew by 26% year-on-year to rupees 1,649 crores, whereas the non-agrochemical business grew by 7% year-on-year to rupees 265 crores. Gross margin stood at 35% in H1 FY26 as against 28.4% in H1 FY25 with an increase of 660 basis points. EBITDA for the half-year period stood at rupees 281 crores with EBITDA margin at 14.7%, showcasing 69% year-on-year growth. PAT stood at rupees 217 crores in H1 FY26 versus rupees 70 crores in H1 FY25 with an increase of 212% on year-on-year basis. Working capital days stand at 84 days with an improvement by 34 days as compared to as on 31st March 25. ROCE and ROE stand at 21.6% and 17.5% respectively as on 30th September 2025. We remain debt-free company and have cash bank liquid investment of rupees 794 crores as on 30th September 2025. We can now open the floor for the questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ayush Chabria from Sharda Capital. Please go ahead.
Yeah, hi, am I audible?
Yes, please.
Yes, sir. First of all, congratulations on good set of numbers. I just have a few questions on, so for the H1, I think our Europe revenue has been strong, but Q2 alone, I think there has been a slight drop and North American revenue has been quite strong. So if you could just give some color on what has happened here region-wise, it would be great.
1 minute. You want the information region-wise?
Yeah, I
For
just want to know Q2, why is it for the agrochemical, Europe has been only 15%, whereas there has been supernormal growth in North America. Any reason? Could you just elaborate on that?
I won't say that there is any specific reason for this. North America consumption has increased and the weather is favorable, and Europe also we have nothing adverse about as far as the weather is concerned. So I would say 15% is very normal and it doesn't require any further comments.
No, so because last year, same quarter, I think we had a 75% growth in Europe versus North America was negative. So I'm just trying to understand what changed this quarter.
Nothing specific that I can comment on.
Understood. So also one bookkeeping question. If you could just elaborate more on the forex loss that we had this quarter, it would be great.
See, the forex loss has been very small and it is notional. It is not real loss. And this is something to do with the cross-currency exchange rates for which we have no control and no command. So this has happened because of the world economic factors, and it's a small difference. Doesn't require any serious discussion.
Understood. But you could mostly attribute this to high revenues being higher from North America. Just trying to understand if that's
attributable only to the euro-dollar exchange rate.
Understood.
Because all our sourcing is in dollars and major sales in Europe, which is in euros.
Understood. All right, that will be it from my end, sir. Thank you so much.
Thank you.
Thank you. Next question is from Shubham Shegal from SIMPL. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Yes, sir. My first question was that even in your commentary and presentation, we talked about volume growth in our agrochemical segment, and you also mentioned that we saw a better pricing. But if we see that the volume growth was around 36%, and our agrochemical segment grew by 27%. So there is almost a pricing or negative realization of 10%. So could you just explain what is driving this negative realization?
Beg your pardon? What was the last part of your question?
So, sir, basically you mentioned that we saw volume growth of around 36%, yes. But yes, our actual growth is lower. So there is definitely a negative realization or a pricing degrowth. So could you just define this pricing degrowth?
See, the pricing degrowth is something which is very minimum. What we have commented when we say pricing growth is compared to what of the historical prices. Historically, the prices had touched down to very low level, and it has grown from that level.
No. I'll just repeat. There is a pricing degrowth which we are seeing, and you mentioned that we are seeing better pricing realizations, which is driving the gross margins. But if you actually see in the number terms, there is a pricing degrowth. So that is what I'm asking. What is driving that?
Mr. Sehgal, I am repeating again. When I say better pricing, I am talking about the historical things. Now you are comparing with the volumes we have which has happened in these 3 months. So we are on a different track. I would suggest that you go to the next question.
Okay, sure. So my next question is on the agrochemical segment. So if we see in the last quarter in Q1, we did like similar sales. We did around 840 crore sales, and we did similar sales in this quarter. But our EBIT was around 135 crores in Q1. But in this quarter, our EBIT is very low. It's almost low by 100 crores. So why is that, sir?
1 minute. Can we have any comment on this?
Yeah.
Mr. Shailesh will answer this question.
See, basically, I think you have to look at H1 performance to get a right this picture, because Q1 we have already reported EBIT at, you are talking about agrochemical EBIT, right?
Yes.
Yeah. So you have to look at H1 performance. Then you will have this. You look at H1, which is rightly reported. Yeah.
But I mean, there is still a very big variation, if you see. Like, I just wanted to ask that why is there such a big variation?
I think being a seasonal in business, probably you have to look at H1 performance in percentage of sales. Okay, for agrochemical business.
Okay, I'll do that.
Okay.
And last question was, even in our non-agrochemical segment, if we see, since the past 4 quarters, we have seen negative realizations. So, any answer to that?
Negative realization? Sir, I have not understood. We don't have any negative realization.
So, if we look at our volume growth that we are reporting, it is much higher than the actual revenue growth. So, that means we have seen pricing degrowth. And that has been happening since last 4 quarters. And despite that, we have seen EBIT margins at a very high level for non-agrochemical. Any reasoning or anything you can comment so we can get a better understanding?
We will take offline this question, okay?
Okay, sir. I'll join back on with you.
Thank you very much. Next question is from Rudraksh Raheja from iThought Financial Consulting. Please go ahead.
Thanks for the opportunity, sir. My first question is, could you give us the gross margins region-wise for the second quarter?
One minute. Is the gross margin? Yes, sir. The gross margin in Europe region is 43%, NAFTA region 23%, LATAM 20%, and rest of the world 40%. Overall, 34.6%.
Got it, sir. And for H2, sir, how would you see the US tariff impact on our business?
No, can you repeat your question once again?
Yeah, for the upcoming 2 quarters, how do you see that impacting our business in reference to the US tariff?
The second half of the business is always better than the first half because it's a seasonal business, you know. So considering the climate and growing seasons, second half is fairly better compared to the first half. And we expect the same thing in the current year.
Got it. And there would be no substantial impact of US tariffs on the second half?
Yes, sir.
Got it, sir.
There would not be any substantial impact.
Understood. For the agrichem segment, sir, are we witnessing any pricing uptrend, or what's your outlook on volumes?
So the prices are on the uptrend, but the speed is slow. But they are on the uptrend.
Sure. Last question on the non-agrichem segment. What led to the sales decline and margin expansion in that segment?
So this is again a demand-based question. If there is a less demand, then the volume goes down. And there is no consistency that the volume should be the same. There is always subject to variations.
But we have seen margin expansion, sir.
The reason to assign to it.
Got it. But this margin expansion, would that be because of a better product mix or something like that?
Yes, it could be.
Got it, sir. Got it. Thank you.
Thank you. Next question is from Rajdeep Singh from Roha Asset Managers. Please go ahead.
Hello. Yeah, am I
Yes.
audible?
Yes,
Go
please.
ahead.
Hi, good afternoon, team. Bhuvnaji and Shaileji. Firstly, heartening congratulations on a good set of numbers on the revenue front specifically. Sir, to one of the earlier participant who was dwelling more on the disconnect between the volume growth and the revenue growth, Shaileji, please correct me if my understanding is wrong. Volume growth is 36%, revenue growth is 20%. So the difference of negative 14-15%, this is because of the product mix and geographical mix change, right? Because subsequently you said Europe is a higher margin business, gross margin and ROW, whereas LATAM and NAFTA are lower gross margin business. And since LATAM and NAFTA has grown faster this quarter, that is why the negative product mix change is visible in the lower revenue growth. Is that fair understanding, Shaileji?
Mr. Rajdeep, you have touched the right point, and it is actually the product mix, which didn't occur to me, and this has occurred to you. It's mainly because of the product mix.
Sure, Bhuvnaji. This is helpful. And sir, since you are saying the H2 is better and full year margin guidance you are maintaining at 15 to 18, which means second half will have to be closer to 19-20%. So again, on the margin front, should we be closer to 19-20% to achieve full year range of 15 to 18, and we would end up on the higher end of the guidance that we have said?
Expect that. We do expect that. But what I am saying, telling you is 15 to 18% for the whole year. Which if it goes up from 15 to 17%, then it has to be contributed by a higher margin in the second half, which could be more than 18 to 19%.
Okay. And sir, one last question from my side. On the tariff, though you have been saying that there has been no impact of tariff. Since August 27, this 100% tariff, or 50% tariff from India was in effect, and China was 100%. Then last evening, yesterday, China has been brought down from 100 to 47. So I think demand is still strong in US and customers are getting in more inquiry and more orders for you. Is that correct?
No, sir. Okay. I would I like to elaborate for the information knowledge of all the participants.
Sure, sir.
Agrochemical products are not freely tradable products. They require to be registered, and any customer cannot buy from anywhere or any country. He has to buy only those products which have been registered and approved by the government of America. And the number of registrations are very limited, and number of sources are also very limited. So we do pass on all the tariff increase to our customers, and customers don't grumble about it, because they are also very easily able to transfer it to their customers or farmers. At the end of the day, the increase in tariff is borne by the US citizens and not the suppliers or the distributors which are involved in the process of import and export.
Sure. So this is very elaborative and helpful, Bhuvnaji. Thank you.
No choice to buy from anybody else or any other country, unless the product is approved, and the process of approval is very expensive and highly time consuming, and it is not impacted by the tariff rates.
Yeah, fairly understood, sir. Thank you, and there is a beautiful mode that you have built in terms of servicing the markets. Congratulations to you and your team, and all the best for stronger H2 and FY27. Thank you.
Thank you, Mr. Rajdeep.
Thank you.
Thank you. Next question is from Rohit Nagraj from BNK Securities. Please go ahead.
Thanks for the opportunity and congrats on good set of numbers for the first half. So just one question for the NAFTA market. During the first half, we have grown by almost 25-26%. During the month of October, I mean, you have alluded to it a little bit in terms of the demand side issues, demand side dynamics. But in the month of October, is there any some moderation in terms of demand, particularly from the NAFTA market, given that some of the material was already dispatched in anticipation of those tariffs in the earlier months? So have we seen any moderation in demand for Q3 particularly, and then Q4 any which will be a start of year, so there will be incremental demand which will be a fresh demand. So your thoughts on this? Thank you, sir.
Mr. Nagraj, first of all, I would like to comment that your question is very long and not to the point. The answer is very brief and to the point, that there is no decline in the demand in the month of October. Does that answer your long question?
Yes, sir. Absolutely fine. That's all from my side. Thanks a lot and all the best.
Thank you.
Thank you very much. Next question is from Himanshu Binani from Anand Rathi. Please go ahead.
Hi, sir. Thank you for taking my question. So, sir, I have a couple of them. Number one, on the revenue growth when we see, so first half, we have already done somewhere around a 23% sort of like revenue growth, while we expect the second half to be like stronger than that of the first half. However, we have been like guiding for a 15% sort of like growth for full year FY26. So how should actually one look into the overall revenue growth for the current year?
Mr. Himanshu, there are no precise and to the decimal point calculations for these things. This is the atmosphere and the consumption patterns which is happening, and that is very encouraging. I cannot give you exact decision of 20% or 22.1% of these things. These are approximate things, and this is what we expect.
Got it, sir. So second, if you can... Yes, sir, please continue. Hello, you were saying something, sir.
Who, me? No,
Yeah.
I think there's a misunderstanding.
Okay. So, sir, second question is largely on the registration. So if you can like give a breakup of the registrations geography-wise as well as in the pipeline, that would be like really helpful.
1 minute. See, we have 2,994 registrations. Out of that, 1,670 are from Europe, 317 in NAFTA region, 759 in LATAM, and about 250 in rest of the world, totally 2,994. Now, registrations in pipeline, Europe is 710, NAFTA 100, LATAM 160, and rest of the world about 100. Totally 1068.
Got it, sir. And sir, my last question is largely on the, if you can like give a breakup of the overall revenue growth between sales volume, price, and forex.
Revenue growth is due to volume growth is 34.8%. FX impact is 1.9%. Product mix is 17%, and total growth is 19.6%. This is for the Q2 FY26.
Got it, sir. Thank you.
If you want it for the H2, I can also give you for the H2. H1, sorry.
Right.
Thank you very much. The next question is from Viraj from SIMPL. Please go ahead.
Yeah, hi. Thanks for the opportunity. Congratulations on good set of numbers. I just had few questions. First is, see, if I look at the segmental margins, right, for Q2 in AgChem, and if I compare to Q1, we have seen almost similar level of sales which we are reporting. But in absolute EBIT, which we report in the segmental, there's a sharp drop. I understand, one should look at H1 or annualized basis, but I'm just trying to understand this better, that what drives such a sharp variation on quarter-to-quarter basis. Hello?
Please give us a moment. The line for management has been disconnected. Please stay connected while I reconnect. The line for the management has been reconnected.
Yeah, hello?
Hello?
Yeah, so did you get my question or should I repeat?
Can you repeat it, please?
So if I look at the quarter two segmental revenue for AgChem, we are roughly around 835-40 crores, and it's broadly same as Q1. I understand we should look at H1 or on annual basis, but I'm just trying to understand our business little better. On a similar level of sales, our EBIT in the quarter two is lower by almost 100 crores versus Q1. So what explains this?
Mr. Himanshu, this can be explained by going on the aspect of product mix. All the products are not equally priced. The prices between one product to the other varies substantially. So the volume growth might have been on a lower price product.
Okay.
You understand?
So, but if the product mix is towards lower price and lower margin products, then our gross margin shouldn't have improved, right? We should have actually moderated. I'm more specifically talking about the segmental AgChem, numbers for the quarter. And if I compare in Q2 versus Q1, the EBIT in agrochemical business has seen a sharp drop versus Q1.
EBIT has seen a sharp drop.
So if you see quarter two versus quarter one, there's almost a reduction of 100 crores.
Quarter two to quarter one is a reduction of 100 crores. I'm not able to get your question, sir.
My question is, if you see in quarter two, agrochemical sales, and if you compare that to the sales of agrochemical in quarter one, they are almost similar, but there is a material difference in operating profit, which is EBIT, which we report in the segmental number. So why is that, the case?
Mr. Himanshu, I'm not able to comment on this question, and I don't have such a deep study of these figures. I can only tell you that this has been mainly impacted also by the product mix.
No, but sure. But if product mix were to have a negative impact, then our gross margin, instead of improving, would have seen some pressure. I mean, that's what I would probably think it to be the case.
No, it's not necessary. The gross margin also depends from product to product. There's no standard trend.
Right. So just two more questions on the segmental. See, if, the Forex gain or losses which we report, would that, when we report the segmental numbers, especially the EBIT, would all the Forex gain or losses, say in Q2 we had a minor loss, in Q1 we had a gain, would that be also reflecting in the EBIT number?
Yes.
Okay. Second question is, if I look at the H1, number, and if I look at the cash flow, we have around 29 crores of write-offs of intangibles. So would it be right to think that all of that 29 crores accrued in the second quarter?
No. No. It
So
has
can you
not
give a
accrued.
breakup?
Just to take, see, this the major portion is in Q1. Hardly anything in Q2.
Okay. So again, the write-offs of intangible would be included in the segmental EBIT, which we report in AgChem, right?
Yes, correct. But then Q1 you will have more impact, and Q2 is hardly there is impact. So H1 you will have that 29 crore impact.
Okay. So it's understood. So Q1, even after having that impact of 29 crores, we had a better margin, and Q2 having no impact, we had a material drop in our margin. So third question is, sir, in non-AgChem, what I'm trying to understand is, overall sales growth we have been reporting, and if I compare the volume growth is much higher rate than the sales growth. So there's a negative price or the mix impact. But if I compare this to our operating profit, EBIT again, our margins have been growing at a faster rate. So I'm just trying to understand what explains this.
Non-ag business.
What is it? Why don't you reply?
Non-ag, can you repeat your question on non-ag business, right?
So in non-agrochemical business, we have been consistently seeing that our volume growth has been higher than our sales growth for last 3-4 quarters, while our segmental profit and margins, which we report, are improving. So I am just trying to understand that despite having a negative price or realization impact, we are seeing one of the highest ever segmental margin. So what explains this?
Mr. Himanshu, my answer is
Viraj,
the product.
Yeah.
Beyond that, I'm not able to comment anything because we don't have all so much detailed information offhand.
Okay, got it. So just two questions. On an effective tax rate, if you look for H1, it's lower. But if I look at on a cash flow basis, we've hardly seen any tax payout in the cash flow terms. So just trying to understand, why is this and how should we look at effective tax rate for FY26?
Mr. Shailesh,
your question is the tax, right?
Yeah, effective tax rate. So I'm comparing both the cash flow and the accrued basis, which is there in the P&L.
So I will take these two questions separately. One is you are talking about the tax impact, effective tax rate. See, our the Dubai business, which is non-agro business, which is Dubai is a tax holiday. So we don't have taxation in Dubai. So to that extent, the Dubai taxable profit is not taxed there. Whereas the agrochemical business, which is spread across all India as well as other countries, we are having the taxation as per the local respective tax rate applicable to those countries.
Okay. So on a full year basis, FY26, what is the effective tax rate we should consider?
So for standalone entity, it is your normal, you can say roughly 18 to 20% effective tax rate.
For the Concall, right?
For Concall basis, yes.
Okay, thank you. Last question. Any thoughts on...
Mr. Himanshu, you are questions. Give chance to somebody else.
Mr. Viraj, you can rejoin the queue for the follow-up question.
Sure. Thank you.
Next question is from Sameer Deshpande from Fair Deal Investments. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, please.
Go ahead. Bhuvna ji and all your team, congratulations for the very good results and the consistency you have shown in last 3 to 4 quarters. And despite overall the agrochemical industry in India particularly doing very badly, we are standing very well in that growing very fast, and the confidence which you have exuded in the future half two also, and is really heartening. The tariff impact, as you mentioned, US tariffs increase or any tariffs will be easily passed on, so that doesn't affect our gross margins and operating margin. That is also really good. So, and the new product registration investment, as you rightly mentioned, will really help secure our future. But the important point which you mentioned, I want a clarification on that. That since suppose we have a product registered in Australia and USA and maybe Europe, and that product registered, when there is a tender for that particular product, then we are and we secure that tender, then we are the only company which can supply that product to that particular countries. Is it true, correct?
No, it's not 100% correct. Every company who has the registration of that product in that country can bid for the tender. But there are not many people who have such a wide range of registrations, and the registration process is a very complicated, investment-oriented, time-consuming, and boring.
Yeah.
So most of the people do not go into this intangible asset and registrations.
Yes.
And we have tasted the fruits of these registrations.
Yes.
And to answer your question, we are not manufacturing. Manufacturers have a lot of disadvantages in chemical business. Because it's very difficult to maintain the manufacturing in the off-season.
Yes.
We are not impacted adversely because of all these variations. We are also not, a manufacturer is bound to sell his product, and he cannot manufacture many products, We have hundreds of products, and if we find that some product has less demand and no margins, we don't deal with that product. We have that freedom, which a manufacturer does not have.
Yes. No, really, the fungibility of the product makes us a e-commerce company in agrochemicals.
Yes,
because where there is demand, you can cater to. Otherwise, you don't have to keep investing into something which is not productive for us or making any money for us. That is really heartening. And the current euro and USD is, I think, 1.15, 1.16. It is suitable for us, no? To maintain
Mr. Samir, first of all, we don't have a choice. But I can only comment that if euro is stronger than dollar, if it is more stronger, it's more beneficial to the company because our sourcing is in dollars and sales is in euros. And if euro becomes weak against dollars, then we are adversely impacted.
Yes. But the current situation seems to be quite favorable to us. Because in the Q1
we'll always welcome if it becomes 1.2.
Yes.
And we have seen instances and timings when the euro has been 1.25 and 1.3 times the dollar.
Yes.
So there is no end to this scope.
Yes. Nice. And all the best to you.
Thank you, sir.
Thank you.
Thank you very much. We will take next questions from Archit Joshi from Nuvama. Please go ahead.
Hi, sir. Thank you, and I hope you all had a very good Diwali. Sir, if you can share the geography-wise volumes. I don't think you have furnished that data before in the call. If you can share that.
Let me see. So geography volume is Europe 7 million units, NAFTA 3.3 million units, LATAM 1.6 million units, and rest of the world 0.85 million units. Total 12.7 million units, and year-to-year growth is 36% in the volume.
Sure, sir. Thanks. Sir, I think a lot of people earlier in the call have been trying to understand how our sales is broken up into. I think you alluded that 35 odd % comes from volume, 1.9% is the forex impact, and there is a 17% negative product mix impact. I was just trying to understand this minus 17% product mix. Shailesh ji, if you can help us understand, since we probably mentioned earlier during the call that product mix impact is positive. So is this minus 17% a price-led decline? And if it is so, what has caused this year-on-year price-led decline? If you can help, sir. Thank you.
Mr. Arshit, first of all, I want to correct your impression. It is not price decline. Product mix means one product we are selling at $10 per kilo, other product we are selling at $90 per kilo, and third product we are selling at $50 per kilo. So this is the prices of each product is impacting the, contributed by the product mix. If there's more demand for $90 per kilo product, the volume will maybe less, but the revenues will go up, and vice versa. Have you understood?
Yeah, sure, sir. Sure. Another one on bookkeeping itself, and this is alluding to our statement, or rather the expectation that gross margins for the second half will be in the similar range. What would be the reason behind this, sir? Is it that the input costs will continue to be on the lower side? Is that the right understanding that we can frame?
No, sir. I would repeat again, agriculture is a seasonal business and agrochemical business is also seasonal business. There's a very good crop in the spring and very poor crop in the winter. So the second half is contributed by the spring season, which has a lot of demand and a lot of agriculture. Have I answered your question?
Sure, sir.
And this is happening year after year. Every agrochemical dealer or manufacturer is impacted by the seasons.
Sure, sir. So one last question from me. I was looking at one of the line items in the income statement, which is purchase of stock in trade. I've seen that for the last 2 quarters, which is 1Q FY26 and this quarter, which is 2Q, the increase has been very sharp. Is this because we are anticipating, or rather we have planned our supplies in a way that we will buy low-cost RM, which was prevailing in the first half, and that might get consumed in second half, which might help us, maintaining solid margins. Because stock in trade that is being reported has grown in very healthy double digits, almost 50% higher year on year. So your thoughts on that, sir? Thank you.
See, our procurement is not dependent upon the product prices. The procurement is again estimates by our customers, our distributors, and again depending upon the forecast for the weather and trend of products which are consumed by the consumers. All these things decide the procurements and not the prices.
Sure, sir. Thank you, and all the best for the coming quarters. All the best.
Thank you, sir.
Thank you very much. Next question is from Manish Shah, an investor. Please go ahead.
Hello, please, sir. This question is from Mr. Shailesh Mandale. Shailesh, sir, even in the first quarter where you have gained a foreign exchange profit of somewhere about 70 crores, the euro dollar was 1.16 only, and still it is 1.16 only. but in this quarter we have booked a loss. So what should be the reason? Have you sold more in the non-euro region in this quarter?
See, let me explain the loss particular in the quarter 2, which we have reported around 6.7 crores, is mainly, see, we are having some foreign currency payables towards our product registration, mainly relating to capex payables. So that also needs to be realigned as per the accounting standard. So those have contributed this unrealized loss of this 6 crore. Mainly 6 crore includes on notional loss, unrealized loss on account of capex payable realignments. It is not to do with this. In fact, if you look at YTD H1, we are having positive YTD of forex gain of 67 crores, and that includes mainly realized gain.
Have you understood, Mr. Manish?
Yes, sir, I got it, sir. And sir,
1 minute, I will add something more to what Mr. Sales has replied. See, we book the foreign exchange on the day the transaction takes place. But the payment is not made on the same day. The payment is made after the credit period, sometimes after 3 months or after 6 months. So the actual impact happens on the date when the payment is made. So if I book the euro-dollar rate at 1.16 on the date of happening and 1.4, then I incur loss. Have you understood?
Yes, sir. Yes, sir. I have understood, sir.
Sir, purely notional.
Sir, so you believe that in the ensuing quarters it will reverse?
No, we don't speculate. We take opinions of the experts, and we find that many times the experts also go wrong. They are not fortune tellers.
Yeah, absolutely right, sir. Okay, sir. And sir, by going by the run rate, should we cross 5,000 crores revenue in this year?
Ladies and gentlemen, please stay connected. The line for management has been disconnected. Ladies and gentlemen, we have the management line back on line with us.
Yeah, sir. My question was regarding by going by the run rate, should we cross 5,200 by the end of this year?
Sir, your first part of the question was 50,000, and I said yes.
No, 5,200.
5,200?
5,200 crores.
Yeah, it can.
Yeah, and sir, but going by the strength of our registration and distribution strength, which we have built in the last many years, do you think in the next 4-5 years can we be a 10,000 crore company? Possible? Next 4-5 years?
You are Mr. Manish speaking?
Yeah, sir.
Mr. Manish, we don't gamble and we don't speculate. We just handle the situation as it comes in front of us.
But sir, going by the strength of our registration and the distribution strength, 4-5 years is quite a long period. Can it be reasonably ascertained that it can be done, or no? There is no chance.
It could happen, but you do not know how does the president of US behaves and how does the president of Ukraine and Russia behaves. Nobody can predict. And all these things also impact the total world economy and the exchange rates and a lot of things, which I do not want to speculate and guess.
Yeah, I got your point, sir. I got your point. Sir, but generally, the European region is a high margin business, and in the second half, we do more business in the European region?
Also. Hello?
Yeah.
You see, there are a lot of countries in the northern hemisphere. They have better agriculture and good economy. But a lot of countries in the southern hemisphere, there the weathers are totally opposite. And fortunately, we have access in the entire world, all the geographies in the world, which is very unique.
Yeah, sir. Great, sir. Congratulations and best of luck, sir.
Thank you.
Thank you very much. Next question is from Love Gupta from Counter Cyclical Investment. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on a good set of numbers. So, I had a question on the non-agrochemical side. So, a majority of our non-agro revenue comes from the North American market. So in that segment, do you see any impact from the tariffs imposed on, like, volumes or demand?
Not so easily, because this non-agrochemical business, mainly conveyor belts, are again not freely tradable products, and we don't sell from the stock. They are all businesses concluded, and we don't have any stock for that. Every customer has a specific requirement and specific size, specific quantity, and a lot of specifications. So this business is made to order and not stored and sold. Have you understood?
But sir, do you see any, impact on, like, volume, negative impact from the tariffs?
Yes, sir. I'm coming to the second part. So it's if a customer is used to buying product from Sharda and is satisfied with the quality and service of Sharda, for him to develop a new supplier takes time, a lot of efforts, and a lot of uncertainties. So he prefers to buy from Sharda and pay the tariffs and other things. He understands that Sharda is not able to absorb all the increase or variation in the tariff rates. This is all happening because we are not stocking. We are making to order.
Okay, so in the non-agro side also you are able to pass on the tariffs to the customers?
Also, yes.
All right, sir. Thank you.
Fortunately, this tariff rate is very openly known to everybody. It's worldly known, so the customer knows that the tariff is increased and the supplier knows.
All right, sir. Thank you.
Thank you very much. Ladies and gentlemen, in the interest of time, that was the last question. I would now like to hand the conference over to management for closing comments.
Thank you, madam. I want to thank everybody who had joined us for this call. I hope we have been able to answer all your queries. We look forward to such interactions in future. We hope to meet your expectations in future also. In case you require any further details, you may contact us or SGA, our investor relations partners. Thank you very much. Thank you so much for everybody.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference call. You may now disconnect your line.